Houthi militia from Yemen have been attacking ships in the Red Sea. This has been quite widely reported in the media. The Houthi militia are closely aligned with Hamas in the Gaza Strip and reportedly receive a lot of their funding from Iran. And they are attacking, in some cases badly damaging, these ships with cruise missiles, drones, and direct warfare. And what I want to do in this short broadcast is focus a little bit on the sort of costs of this to shipping companies, and particularly the insurance costs. Insurance costs are skyrocketing. Every time a ship wants to transport goods through the Red Sea, which is designated as a war zone and therefore quite volatile, it has to pay an insurance premium, and this can be quite a lot of money. Before these attacks began, the typical cost of an insurance premium for taking a ship through the Red Sea would be about 0.1% to 0.2%. Now, assume a fairly large cargo ship could cost $100 million. The cost of the trip in insurance alone would be about $100,000 to $200,000, give or take. Now, having spoken to a number of insurance brokers, the price that insurers are charging for transporting goods through the Red Sea, and we're talking about the cost of the damage of the ship, is about sort of between 0.175 and 0.7% of a total ship's worth, and often towards the higher end of that. This can be for a ship that costs 100 million. We're talking about now it costs $700,000 to take the ship through, and that is quite a significant jump from perhaps 100,000 to 200,000. And the fact that so many insurers are charging different prices, and this is changing all the time, shows that so many people are taking a different view of risk in the region. Now, the alternative, of course, to that cost is to take ships via South Africa around the Cape of Good Hope. But this can add a significant additional cost in terms of both journey time, fuel costs, crew costs. So the estimate for this is for a typical journey, it might add an extra 10 to 14 days, and the cost would be around $20,000 to $30,000 a day extra. So at the moment, carriers and cargo carriers are weighing up the cost of going through the Red Sea compared to going via the Cape in South Africa. And there is another aspect here, and that's reputational damage. A big shipping company like Maersk does not want the headlines all over the world that its ship has just been destroyed by Houthi militia. And therefore Maersk has said that it will, and some others as well, have said that it is temporarily suspending operations through the Red Sea. What is actually happening is there is a big tussle between ship owners, on the one hand, who would rather go via the Cape because then they don't lose their ship, and those that are chartering the ship who really want to get goods to market as quickly as possible. There's a huge cost involved in that delay. And so the ship owners are saying, let's go via the Cape. They can also then charge an additional premium because the ship is out for loan longer and there's no danger of losing their ship. Whereas the charterers who take out the insurance are saying, well, we're insured. If something happens, then we are broadly covered, but it's important to get the goods to market as quickly as possible. How this will play out is still an open question. Lawyers will no doubt be taking one position or another as to whether ship owners can say, let's go via the Cape, and the charterers don't get a say, or whether contractually the charterers can take the ship owners via the Red Sea. That is still to play out. The other thing to mention, of course, is that the Red Sea has historically been a very volatile area. There's long been piracy in the region, coming from Somalia, a lot of lawlessness. But actually, what is happening now is very different to that. Over the past 10, 15 years of piracy in the region, companies like Maersk have decided to introduce armed guards to stop pirates boarding the ship, taking the ship and its crew hostage. And they've had quite a lot of success in doing that. But it's one thing to put armed guards on a cruise boat, on a cargo boat, to stop it being taken over by pirates. Quite another to stop it being blown apart from a missile or drone attack. And so these companies, there's very little that they can do to limit this risk. The other thing to note is the US has pulled together a task force designed to start operations in the region in order to limit this attack. This is an untried and untested task force. So for now, insurers are not pinning too much hope on its success, or they just don't know. It will take a good 3 or 4 months, even longer, to see whether it's actually being a success, and for that to filter down to the risk assessment that these insurance companies periodically carry out in the region. For now, insurance prices are certain to rise, and so shipping companies have a very difficult decision to make. Do they keep going through the Red Sea, which is the fastest route between Europe and Asia, or do they choose to go via the Cape with low insurance costs, less risk of attack, but much higher fuel and crew costs? We'll see how that plays out. But one thing for certain is, as we go into 2024, this is going to put even more pressure on inflation around the world. It's very hard to see how the prices of goods, your basic goods, cannot go up as they are shipped, as the shipping costs around the world also increase. Raw materials, oil, steel, that kind of thing, certain to increase. It's going to have a very similar inflationary effect to the one that the Ukraine crisis had. And so the bad news is that the cost of living crisis is not going to go away. And potentially, as we go through this year, could get worse.